Hello, good evening, everyone. Um, or I should say good afternoon. It's May the 17th, 2023. Hope everyone's doing well here. We can get this started in just a bit. I just want to start off like quick introduction of what we're going to be doing today. And there's a lot of different things to talk about, but the way that I envision this is that we break down a few key concepts that I do want to talk about, and then we can roll over into a Q&A portion where um, I'd be super glad to answer any questions that you might have. The basis of this is that we're going to be talking about the futures market overall in today's live here. So I'm going to be breaking down some core concepts about how the market conditions are continuously changing. They're changing even on a seasonal basis, and how we don't necessarily have to do too much to actually adapt to them. So, hello everyone. Hope you're all doing well. It's the evening where I'm at. It's the afternoon probably for everyone. So why don't we just get this started? In today's video, I do want to really hammer down the futures market, right? I want to talk about the futures market in a deeper level where we don't have to necessarily tiptoe around changing market conditions and overall just changing markets. Like 2022, 2023 have been realistically fairly difficult years to trade, and especially over the last bit here, especially when we're entering into the summer seasonality. So it's not only summer seasonality that I do want to focus on. I think that the whole concept of the futures market and trading it using specific tools is applicable to any different um, market condition, right? It doesn't matter what the market condition is, the tools do stay consistent. So, generally speaking, what's going on right now is we're in a period of tougher macroeconomic cycles with higher inflation. We also have debt ceiling concerns as of late. There's a lot of different things, especially on a macro scale. Earnings are down. The labor market's tight. We have over ease. We have massive quantitative easing. Historical rate lows are now in a quantitative tightening cycle, right? Rate increases are continuous, and we have inflation that the Federal Reserve thought was once transitory is now not transitory. So this brings out a lot of uncertainty and volatility in the markets in general, which have been a lot more difficult to trade in 2022 and also 2023. Now, what's happening is from a seasonal perspective, we're entering into the summer market. Summer markets are historically very dull in terms of volume, volatility, and movement, and you pretty much trade ranges and compressions for the majority of it. So that's what's been going on for the past uh few weeks, right? We've been trading a massive compression, a massive range. But one thing that we do have to understand is that if we have the right tools at our disposal, it doesn't necessarily matter what kind of market conditions are going on and what kind of market conditions are shaping up or will shape up. The way we look at the market, the trade style, the tools used stays consistent. So we've ran away from different indicators, from different like shiny objects, and we're using these consistent tools on a daily basis. You probably have guessed which ones already if you have watched some of these past videos, but we use consistent tools to navigate not only summer market conditions that have generally very low volume and volatility and are notorious for getting traders and short-term speculators chopped up, right? We can navigate those with simple tools, obviously exercising patience and waiting for those key areas to actually get traded. So using just these two specific tools, you can not only trade summer market conditions, but you can trade all market conditions. Now, if you guys have followed us, the volume profile or a profile, right? And the depth of market. So I'm going to talk to you guys about a little what happened this week, but these main two tools are the reason as to why we're going to be launching this week long, I guess, futures workshop or futures course, if you will, that starts at the end of May and goes into the beginning of June. So what the main focus of this week long workshop is going to be is going to give you an understanding of these tools, and I'm going to show you how, no matter what the condition is, these stay consistent rather than focusing on individual indicators or whatever the case may be. So, realistically, um, what's been going on over the past few days, over the past few weeks, actually, has been just a stagnant, sideways, compressive market, right? Unfortunately, I can't share the screen with you guys because I started this as a stream rather than starting it as, or I started as a video rather than starting it as a stream. I should use like OBS or something. But if you go to community, if you're in our free Discord, you go to community.tradeproacademy.com. I'm going to paste this image that is a very, very key chart based on the volume profile and the market profile, right? And what you have right here is, I'll just paste it right now. Give me like 2 seconds. I'm just drawing on it. So if you check that out, right, check out that free Discord. If you check out that image, or if you just check out any chart in general, I'd love to share the chart with you guys. But again, like I just don't have that ability. If you check out that image, you can see there's a very, very large distribution that goes sideways, and there's a massive compressive period realistically going on for the past few weeks. That low area, right? If you pinpoint specific key regions, that could be 10, 15, 20 points apart, right? These areas, if you trade them, you'll get away from the chop and the grinding markets, right? No matter the conditions, these ideas and principles stay the same. So in days where the market barely moves, and days that the market chops around like between a 3-5 point range for hours, right? We're able to extract like 20, 15, 30 points out of these moves, basing it off key levels and not necessarily basing it off of uh, trading sessions or anything like that. We can combine both the extended hours trading session and the regular trading session into one just main fluid session just by trading these consistent areas and these consistent tools known as a market and volume profile as well as the depth of market. So that's what I'm planning to break down in its entirety. How you can take these very simple principles and not only apply it to the summer market that's super boring, low volume, a lull, and gets a lot of people chopped out by over trading, false breakouts, all of that, but also taking that and transitioning it to any different market condition where there's trends, when there's potential 2023 recession, as a lot of people are liking to call it, right? No matter the conditions, you can take these specific principles, right, and apply them to any market condition. That's why we're launching this at the end of March and or into the beginning of June. So, sorry, not March, May. So from May 31st, June 1st, June 2nd, 3rd, 4th, that's going to be the 5 days of the workshop. And you guys can all sign up for that link. It's in the description. It's like the first line it's the first link line in the description. You can go and sign up for that over there. So with that, you can realistically see how these tools are being used on a live base, on a day-to-day basis, and understand that markets are not, regardless of the volume, volatility, whatever the case is, market conditions should not affect the way that you trade, right? So building the system and building around this system, right? We've learned that regardless of what's going on, if the level gets traded and you see your qualifiers, no matter what the time is, you can have positions on that. So again, unfortunately, I really wanted to share the screen here, but that's the main intro that I wanted to give you guys. Again, if you want to sign up for that, the link is in the description. It's like the first actual link. There's like a little description, and then you see the link, the first area at it. It is completely free. I'll be doing this on 2 p.m. at 2 p.m. Eastern for 5 straight days, even through the weekend. So I'm going to be breaking down all those principles, all those core concepts, and giving you guys a very solid foundation as to how like real traders would actually approach market conditions regardless, right? Whether it's volatile, not volatile. These principles are extracted from proprietary traders, right? How proprietary traders trade based on principles that don't change, and that's going to be mainly volume. So, with that being said, right, I do want to open up the floor for any Q&A based on that, based on anything else, right? I think a lot of people do have some questions here. And if you go into community.tradeproacademy.com, that's the Discord link there. I did post that first image. Um, and it's just the volume profile image in there, so you can go and check that out. But let's see. Yeah, like we are in the summer market conditions, right? I struggle to hold the right plays and let my bad plays and maybe bad trades play out. The stop losses. How can I get better? So like realistically, trailing is one of the most difficult things, Jaspreet. I'm glad you bring that up. Like usually letting stops get hit without trailing to its maximal potential. Realistically, trailing into a maximum potential is probably one of the most difficult things because you do get pullbacks. You can get pullbacks that are like 10, 15 points, and then it goes another 30 points. Those trades that pull back like that, right, you're realistically willing to risk the whole gain for that extra gain. So I wouldn't necessarily say that those are one the easiest trades or the smartest trades to risk a lot of the open profit for more potential open profit. I think like a solid rule of thumb is when you get like a 2 or a 3 to 1 risk to reward, right? Those are good areas to start tapering off positions, assuming that you have multiple contracts on a position and then trailing with I would use a depth of market to trail with that, right? Whether it's on a volume profile basis, hiding behind ledges and giving it some breathing room, or whether you're just watching the DOM reactivity and seeing where the bullish versus bearish bias does flip. But I think trimming, like if you have a full position, let's say you have like 5 contracts on, trailing along the way is probably the best way that I've experienced to um, kind of manage that risk to reward where you don't take full losses and you can trail to its ideal max potential. Like what you have to ask yourself and like even answer what causes you to not hold the trades or get out of the trades either prematurely or whatever the case may be. Is there a payment plan for the futures course? There is not, Omar. Will the week-long session be recorded in case we miss one? They will be recorded, Edward. Alex, no, it's not the same as the futures course. Will it be recorded and accessible at random? Yes, yes, it should be, Stephen. This workshop is like the whole concept of it, for those that are already with us or those that are new, is to help ease you into different market conditions using consistent principles in the market. Like if you're already with us at TPA, like this isn't something that you necessarily need to watch. You can uh, revitalize some of the things that you already know, but it's for people who haven't necessarily traded summer conditions, who haven't traded a different market condition, who want to experience something that changes, looking at maybe 2022 conditions, 2023 conditions, and how all of those, no matter how different they are, can be traded the same way, right? That's the premise of this. I would for sure advocate smaller targets, like for summer conditions. I wouldn't honestly advocate smaller stops because when you, especially when you trade specific assets, like if you're trading like the S&P, for example, the S&P, like I would say there's a set amount of points that are considered noise. I wouldn't use smaller than a 3 point stop regardless of the conditions, right? When it gets more volatile, I would widen the stop, but as they stay, I don't really see the need to go under 3 points realistically. Targets, right? If you trade based on a system that's similar to what we do with volume profiles, market profiles, you don't even need to honestly squeeze down your take profit potential, right? I don't think that's necessary. I like I would say that I would advocate the expectations to be lower for follow through and general movement. But if you catch good trades, I don't think the expectation should be for smaller profits or targets, I should say. Yeah, oh, and ATR is what a lot of people use to consider how wide your stop and profits are, right? Like realistically targets, I kind of go at a minimum a 1.5 to 1 in terms of the stop loss, or a two at minimum. So like if my stop is like 3 points, I'd ideally want to be taking somewhere around like 4 to 5 points profits for every 3 point risk. ATR is a good indicator for sure, to kind of give you that, because ATR does change with market conditions. But again, I think that even in summer markets, like ES can still move sometimes erratically, where 3 points for me is enough of wiggle room regardless. Larry, what indicator do you use for market correlations? I don't like this is the whole point, Larry. Like no indicators. Like I want to show you guys how like actual prop traders and like big money traders use a depth of market and use the tools available, for example, market and volume profiles, to not only trade any specific market but to trade any market condition without needing to rely on things like indicators, right? I want to show you guys like the base case of what trading revolves around, and that's volume, right? Volume is one of the only things that stayed consistent throughout how trading has evolved, right? There's no need for averages. There's no need for any kind of oscillators, right? If you understand how volume and volume principles work, you can not only understand where markets have key levels of support resistance, you can understand what the direction of the market should be, right? What a high probability move looks like and the directionality of that move, and what the expected potential of that move is, right? So there's a lot of these concepts that I do want to share with you guys. And as long as you understand volume and how weak buyers or sellers might be at certain levels, you can understand how to trade any market condition realistically. How do I compare Jigsaw to Sierra? I think Jigsaw is a great tool. I think it's a little more expensive, but I think it's amazing, right? I think chart wise, Sierra charts is better. The DOM on Jigsaw is better. Like I know a lot of people that just trade using Jigsaw but use Sierra charts as charts. So I just prefer to use Sierra charts in general without having to integrate Jigsaw as well. On a day like today, how many trades are you taking? George explained metrics relates to review on podcast. He took 39 trades on a day he reviewed. Yeah, I take less trades like overnight. If you guys are already with us, like overnight, we were long 24s into 44. Um, I tried to get long 30. I took a stop, got long 27, and that was literally the low of the day. So I've taken four trades, I think, today, three or four, something like that. I think on days like today, right? Like I want to catch a move and ideally stay in it as long as possible. I don't think in summer markets, like if you're trading more than like having six trades a day, I think that's just too much realistically. What about the DOM? Which the concept of it? So yeah, so the DOM, Jorge, that's a good question. The DOM, realistically, I would put the DOM at a very, very high importance. The way I like to combine market profile and volume profile in the DOM is identify levels from the visual aspect of market and volume profiles, right? If you check out any of the videos that we've posted here, you can see how that's explained. But what what I like to do is I generally get the direction levels and areas from profiles and then execute based on the DOM's buyer and seller aggression. So all three of them together, right? They support each other extremely well. I think it's very, very difficult to trade without a DOM and understand where the market wants to go and what the strength is of the market. Fatty. To gauge market conditions, am I relying on VIX average daily range or feelings? Um, I would say none of the above, realistically, Laurent. If I want to gauge market conditions in terms of volatility, right? I would consider volume on the day, right? And the first like initial balance of the move. The first initial balance of the move is the first hour of the day. And I want to see how the range plays out in that, how much volume trades in that first hour, right? If there's not that much of movement in the first hour, it's probably going to be a dud of a day. If you can't escape like the overnight balance either, it's probably going to be a dud of the day. If you start off with less than 200,000 contracts trade on the ES, it's probably going to be a crap day as well. So those are some of the main concepts that I like to gauge. High volume time frames as opposed to avoiding overnight or pre-market. Case, that's a very good question. Would I recommend trading high volume time frames like from like 9:30 market open Eastern time to 11 versus any other time of the day? I think after 11 until about 1:30, market gets horrendous. So I think that's the main avoidable level. Time frame. Into the end of the session again is a high volume time frame usually where you have a lot of volume into the close. So that's around like 1:32 p.m. Eastern time until the close. That's usually a good time frame to trade. Pre-market, the first half an hour leading into the pre-market. So usually I'd say starting at 8:30 until the market opens, so the first like the hour before the market opens is a very difficult time as well. But if you're at key levels, I think that some of the better time frames to trade are going to be the higher volume time frames, which include the European Open, which happens at 2 or 3 a.m. Eastern time, and then the US Open and close, right? So those are ideally the best times to be looking into positions, opening positions, rather than trading the lower volume period. So that's a good question. Do you use rotations to identify impulses and stops? Pencho, I do not. I focus on the DOM's reactivity at areas. So rather than price action. Yeah, Jason, I haven't used a 5 tick stop in years, to be honest. I think the minimum you should be looking at on an ES is a 2 point, right? If you're trading with like smaller tick stops, like you're scalping at that point, and that's just not necessarily how I like to trade. Jaspreet, those are a lot of what are those acronyms that I have no idea what they mean. I'm sorry. I don't know what F VG is, BSL. I have no idea what any of those mean. Summer seasonality usually ends like somewhere in September. So like usually like May to September realistically. Yeah, like there has been decent moves. I'd say even over the past few weeks, like you think that summer seasonality has to be boring and choppy, but there are moves. If you trade off key levels, like you can find even 10, 20 point swings. I honestly trade all days, Steven. If it's there, it's there. Sometimes I have one trade, realistically. Can I talk about the rebid and the reoffer? Kai, I don't have a I can't share the screen, so that's gonna be something that I'm gonna be talking about throughout this workshop. It's just gonna be pointless if I'm just going like this and talking about rebid, reoffer. Like, I don't think you're gonna learn too much out of that. You can see the total volume on a, like on Sierra charts. What's it called? Let me just check. Let me check what it's called. On Sierra charts, if you go to file, and you go to a new quote board, right, you can get the volume of the day. Um, or if you just look at your charts at the top, when you open a chart, it says DV, daily volume, right? At 9:30, see what that daily volume is on Sierra charts. I don't know about other platforms, sorry. Ben, you got this. What chart setting and moving average duration are you using for ATR? Dwayne, I don't really use the ATR that much. I know it's a good tool to gauge it. I just stick to my stops, like the ones that I know based on experience. Hey, welcome, Louise. Fair value gaps, buy side, sell liquidity, equal highs, equal lows. Jaspreet, sell side liquidity, buy side liquidity. Um, Again, I don't even know what those things are. So I'm just gonna say no. I don't know. I don't know what that is, to be honest. I don't use that. I can't use it if I don't know what it is. How many contracts do you recommend to start? Jorge, one. If you're asking how many contracts do you recommend to start, one. Trade a one lot. Um, and yeah, learn how to trade a one lot. One lot trading one lots is absolutely horrendous, right? It's bad. When you trade one lots, especially when you're starting to trade just like any size, like if you're like even in micros, like I think people underestimate this is something I'm going to talk about throughout this workshop. I think people underestimate the actual size of an account that you need for micros, right? I don't think anyone should be trading micros with like $100 account or like $1,000 account even. I think you need like sizable account size to actually trade any kind of futures contracts because the notional value is fairly high. Now, let's say you're trading one micro, right? It's very, very difficult to trail and extract large moves out of a micro. I would say learn how to be able to hit your full profit target consistently multiple times a day, multiple times a week, and then add lots and look to trail. I wouldn't trail with like under like 3 or 4 lots. I'd just be taking like whatever my max profit is time and time again to build that consistency and that confidence. Jaspreet, I don't. Okay, so for whoever's asking about like indicators or anything like that, the whole premise of this, why I'm doing this, is to show you that there's a few small main concepts to the market that if you learn, you don't have to look at anything else. You can trade any market conditions. So I don't use any indicators whatsoever, nothing. I just use volume and a depth of market. That's it. And I'm going to show you why proprietary traders trade like this and why big desks trade like this, right? Because if you learn how to trade like this, you're not going to look at an indicator ever again. Workshop is structured. So there's a link to sign up for that workshop. It's in the description. Go check that out. But day one, I'm just going to be introducing futures. Day two, I'm going to be talking about how market psychology actually moves the market. That's a good question, actually, because I haven't talked about this. Day two, we're going to be talking about how market psychology actually moves the market. Day three, we're going to be talking about market moves and different profiles. Day four, we're going to be talking about order flow. And day five, more of a trader's edge and understanding risk management and actually growing as a trader. I have Logan. I did that. I did that in March. I did that for 5 days in March. I opened Discord live for the full week. I might do it here and there again, but it was pretty successful. No, Alex. Oh, so ES and MES is just the micro version of ES. That's a good question too. Like if you're starting to trade, like always trade with the start trading with the micros. Don't trade with the ES to begin with. You need a very large account balance to trade one ES, first of all. Even though margin says no, I would highly recommend you have a larger account balance, like even like 8 to 12 grand per contract to trade one ES, right? The whole point of that is because ES has large moves, right? If you take like a full two, like a 3, 4 point stop on ES, that's like 100, $200. So if you have like a $2,000 account, like a lot of it, like 10% of it's just gone right away. So consider that. Always start with the ES. Always start with the MES, and the movement is identical, except for sometimes you might get slippage in the MES where it might not look like it traded, but it did trade there. So you might want to consider wider stops with the MES. In general, what aspects of the market profile do you use compared to the volume profile? Very good question. So the volume profile, obviously, we use the volume, we use ledges. Market profile, I like to look at single prints on the market profile and market tails. Realistically, I look at the initial balance as well. So A and B period, what happens outside of A and B period? Are there tails? Are there single prints? Right, and how the reaction happens at those areas. So that's mainly how I use the market profile, because if you get tails on either end of a market profile, there's a high chance for a market reversal back into the mean, right, or the balance. So, excuse me, that's a very good reversal play. If you have single prints within the profile, they act as key support resistances. So that's information that you necessarily don't get right away from a volume profile. Alex, what are your concerns when it comes to making money on MES? I think like 2 to 3 contracts is like that's a good area, right? Like I think like trade one contract to start with, see how it goes for a week or two, right? Because managing 2 or 3 contracts is very different from managing one. The workshop is $0, Michael. There's just a sign up link. Like all you guys have to do is go and sign up and I'll just host it. It's in the description. 0. Um besides the low besides the low volume, is there sorry, having trouble reading this. Besides the low volume, is there anything else to worry about the summer season? Um Low volume, but also like what's going on right now, like there's a big looming macroeconomic like downshift, right? So you can have some volatility over the summer, but just expect longer ranges and compressions like we've seen over the past few weeks, and less follow through, less breakouts, right? Just expect more chop realistically. Thank you, Logan. I appreciate that. Sierra lets you watch ES but trade MES in the background. Exactly, Mike. Yeah, you can do that. Why use the ES chart even when trading MES? I like to use. Well, okay, so it depends. Now, you don't necessarily have to use a ES chart when you're trading MES if you're looking at like candlesticks or price action, but I like to look at an ES DOM because that depth of market is like the original depth of market where more money actually exchanges hands. The MES depth of market, it's going to be different figures, but it's generally going to follow the same principles as the ES. But I just rather focus on the ES because that's like the originator for the depth of market. November, thoughts on Williams fractals? That's You've stumped me. I don't, the only thought I have is I have no idea what that means. You consider possible trading futures with 95? Yeah, for sure, Jorge. Because futures markets, they're open uh almost 24/7, right? They're closed at 5 p.m. until 6 p.m. Eastern, and then they open in the evening session, right? They trade throughout the night. I usually take positions, go to bed, right? Have a stop on them, trade in the mornings, right? I trade all throughout the day if there's areas to initiate these trades on. So yeah, it's super possible. What would your take be on automation, AI bots, and so on for the future of trading? Laurent, um, it is possible, but like I would say that you would have to feed it the right information and data for that to be a viable source of like trading, right? And if you don't know what data and information to feed it or what to tell it, like there's no real point realistically. Um, if you don't know what you should be looking at, I highly doubt a robot can learn from you to be able to do that out of nowhere. Ivan, do I use a footprint at all, Pencho? No, I don't. Like 1% of my trading, maybe. Like I like to look at the footprint to find a visualization of like stuck traders realistically. I don't hinge on it though. I don't really use it that much. Dan Trader, that's a good question. When Congress raises the debt ceiling, should we expect a nice move to the upside? I want to say no because we haven't seen a move to the downside amongst all this panic. So there's no reaction on that news. So I don't think there's going to be a reaction from something that we're not really from something that we're expecting anyways. Would you improve emotions and self-control? I think, like, if you can't do that on your own, Edward, you're gonna have to put a hard stop on an account in trades, and what I mean by that is just, like, having the broker or the actual, platform just lock you out every time, like, you hit a daily loss or a weekly loss until you just, like, learn it. I don't think there's too much else you can do on that, like, you can try to improve psychology and other aspects that you can find, but, like, if you can't, like, show self-discipline, then, like, a lot of the ways, like, an easier ways to just have hard stops like that. How do I set up my how do I set myself up for the day when I start trading? So that's a good question. First thing I do, right? I post this on Twitter as well. Like, check out Trade Pro Academy on Twitter. Check out the community.tradeproacademy.com, right? I post it there. But I'll go through a market profile and a volume profile chart. And when I go through a volume profile, market profile chart, I mark up the areas and see what happened on the extended hours trading session. So the prior session, what had happened, what kind of move happened on the overnight session, where there are single prints, where the initial balance was, where tails were, where the general overall big distribution block sits over the last like few months. So if we're trading within a big distribution, I'm expecting balance to hold. If we open outside of the compressive period, which can happen tomorrow, right? I'm expecting for a trend day, right? So it's mainly revolving around how the volume profile, market profile kind of shape up over the past few sessions, along with what I've noticed from the depth of market over those last few sessions, right? Maybe yesterday there was a strong bid, and we're at some key areas. Let's see if today we can continue the bid, right? Appreciate it, Stephen. I use Optimus Futures with Rhythmic software. Looks good, but not sure if I have all the tools that you speak of. Optimus. What? So, what platform are you using, Alex? Like, are you using Sierra Chart? Am I still trading options? Yeah. I like to like I'll mainly swing trade options. If there's some day trade plays on like ETFs and big tech, I'll look into them. But I mainly, on a day trade perspective, I'll sell premium. So I'll just sell credits and collect the premium at the end of the day on 0 days to expiration. If there's a potential on a move, I'll swing trade it. But like that happens maybe like a few times every month on swing trades. No, they have their own platform, Optimus Futures. I would highly suggest um, Alex looking into the Sierra charts, right? I don't know what Optimus Futures platform looks like, so I can't really give you any indication. Perry, there's a link in the description. I hope. Let me make sure somehow. Can someone check? Can you tell me if there's a link in the description? It should be like the first link that you see. Okay, perfect. It's there. I appreciate it. What is your favorite levels? Yesterday's overnight high. Blah blah blah. Gottlieb. So my favorite levels are ledges on a volume profile. Um, so it's none of those levels, prior highs, prior lows, like none of that. My favorite areas are areas where I've seen the DOM like rebid or reoffer super aggressively in the past few sessions. There are areas where I have massive ledges on a volume profile or there's big volume traded because that's where you find strong-handed buyers and sellers, right? The market's made up of weak-handed buyers and sellers and strong-handed buyers and sellers, and you want to be identifying where the strong-handed market participants are and realistically trade with them. That is my answer. Appreciate it, everyone. In terms of running trading like a business, how do you forecast a monthly percent return you expect as a prop trader? Uh, oh, and I don't have an answer for that. I'm not even sure if I understand the question. What my expected monthly return is. It depends on account size, depends on a lot of things. Yeah, this live will be saved, Jaspre. I think I think swing traders would have a better return than 20% annually. I know like the average for investors over a very long extended period of time is about 10%. I feel like swing traders should be outperforming that by a decent bit more. Day traders outperform that like successful ones for sure. Yeah, I like bar delta and cumulative delta. I think delta has a good place in the market on like bar delta and cumulative delta because it shows you where there's trap traders, right? Where there's aggressive buying, aggressive selling, and if it's working or not. Yeah, I do have swing positions open on big tech from the end of April. Yeah, for futures, Jorge, AMP is good. I also opened a swing um on SPY short. Um Took some profits from other positions and opened a little swing on the short side for SPY for July. I'm not expecting that much of a drop, right? Like expectations. I think the it's a debit spread. I opened a 407, 401 debit spread, meaning that my target is around 407 by July without really going too much up. Obviously, you don't want to lose value in the position. That being said, if you guys have like a few more questions, maybe I'll do this for like a few more minutes and then we'll wrap it up. Um, it's been great. It's been very long. I really appreciate all the questions. I really appreciate the engagement and everyone coming forth. And remember, the link to the workshop is totally free. It's in the description down below. So go check that out, sign up for that. And remember, right, we're going to be divulging how you can take very simple tools and use them in any market condition realistically. How long have I been trading for? I think 9. I think someone asked me that today. I think it's been 9 years or 8 years, 8 or 9 years, which is actually a long time. What brought trading to my life? Um, I was a failed engineering student that liked the stock market. Is this a futures chart or a DOM? This is my face. I'm not sure what Varnik. I'm not sure where what you're referring to. Jasper, you were in elementary school when I started. Damn, feeling old now. Yeah, let me know if there's any final questions here, realistically. Yeah, I started trading when I was like 18, 19. So like 8, 9 years. I'm gonna be 28 this summer. Uh, yeah, close to a dirty 30. Do the options chart and futures chart move in the same direction? So there's a pretty big difference when we're talking about futures and options trading. Options trading revolves around multiple different variables, which actually reflect in the price changes of the option, right? You have the time variable, which is based on theta, right? You have time decay. You have a delta variable, you have a gamma variable. So realistically, a stock chart and a futures chart, right? S&P with SPY would move in the same direction. SPY options, depending on the option, might not move in the same direction as the ES futures. So there's very different derivative vehicles, right? You can trade stocks as if, I mean, you can trade options as if they were stocks when you trade super high delta, closer to one delta trades, acts more like the stock itself and the movement. I simply have a hard time trading with the dime. Most familiar with the candlesticks. Well, I think Varnek, it's very, very useful to um, evolve into some kind of volume trading. Take a look at like volume profiles and market profiles if you're struggling a little with DOM, and ease into the DOM step by step. I think once you have a grasp of it, you'll really understand why it's such a powerful tool. Financially free before 30. Realistically, that's the goal. JW. Do you ever deal with over trading, revenge trading? And if so, how did you overcome it? Yeah, it's a very good question, Jasper. I I didn't really deal with revenge trading. If anything, I dealt with under trading. I didn't really deal with over trading. I was more of an under trader, kind of just waiting, really taking my time and like um, making sure that I was sure of the trade. And by the time you were sure of the trade, it's already moved like a couple of $100 in your direction without you. So one of the things that I did if you're an under trader, I honestly just took my first position like right off the open just for a few ticks, lost a few ticks or gained a few ticks just to like get a position on the board. And then you have something to work with, because I think it's always the first position for an under trader to really get into the market groove. That's something that worked for me. Over trading, I haven't really um, had too much to deal with that. Perfect. I appreciate that, Edward. With that being said, I hope everyone is super excited about this workshop. I'm really happy to launch it in the coming weeks, right? Keep an eye out, right? You're going to get emails about it if you sign up in the description down below. Realistically, it's a completely free workshop. Thank you so much for the Q&A. You'll get emails that explain what we're going to be talking about throughout the workshop, and it's going to be great. I'm going to show you guys a lot of things that you probably have never seen before or don't know about. So if you want to keep in touch with us a little more, you can find us on Twitter at tradeproacademy.com. But you can also jump into our free Discord, community.tradeproacademy.com, where you can chat with us. And yeah, I really appreciate your time, guys. Thank you for jumping on this Q&A, keeping me engaged, and also asking a lot of questions and being a part of this community. So I appreciate that a lot. Um, I hope to see you all there, and we'll get this started on March 31st. Everything will be recorded. You'll have access to it again, but I hope to see you guys live. And thank you so much. Let's do this again tomorrow. Tomorrow's Thursday, then we have Friday, and we have the end of the week. So let's wrap up the week strong. We rallied pretty aggressively into today's close. Let's see if that does continue tomorrow, and mainly what happens in the overnight session. So thanks again, guys. I appreciate it, and we'll chat soon.